Hey everybody, and welcome to the Sunday market commentary. I hope you've all had a fantastic weekend. I want to keep the intro really short and sweet as this commentary ended up becoming quite the beast, especially on my part. I had so many things to go over, including a trade recap on the pound US dollar buy position that I took on Friday. And I really wanted to dig into some of the bits of price action that we've seen last week. I hope that the in-depth price action that I dug into in the commentary is useful. I really wanted to stress and explain the entry models that I released earlier in the week. And if you haven't checked those videos out already, you can find them in the entries and management section in the Discord, as well as Putting It Together series episode 2. So I hope those videos have been helpful in how to position yourselves, how to approach the analysis from a top-down perspective, and then look for entries using a more rule-based entry model and entry criteria. Time just kind of escaped me, so I'm not really going to spend too much time speaking about anything. I want to jump right into the charts. We have an exciting week ahead with so many opportunities on the cards, so let's jump into it. Let's start with Aussie dollar, and we'll start with the weekly chart. When we're looking at the weekly chart, not a whole lot has changed from the previous commentaries. As we can see, we're still in this overall bullish move. Our weekly high is this spot right here, this swing high, and our weekly low is right here. And as we can see, we're just making higher highs and higher lows. We are approaching the weekly order block or point of interest that we will be trying to look for short opportunities when they come, but as of right now, we're still in that bullish trend and we'll be looking for further upside, although we do know that price can very likely pull back quite deeply within this weekly range before we actually move to the upside. So if we move on down to the daily chart, we can plot out our overall daily range, and what we can see from the daily range is that really we're still moving sideways. We really haven't done a whole lot in the past week. And when we're looking at price action, it's not really exciting, if I'm entirely honest, just looking at the daily chart. But this is the overall trading range that we're trading within. We just drop on a fib. We can see that we would more than likely want to be looking for any sort of buy entries down more towards this way. And if we look, we've broken this high, which means that we have a daily order block resting in and around this area. As we can see, we came down and then we came back up. And if we're looking at price action, if we look at the last down move candle before the up move that broke structure, you'd see that it was here. And if we just keep moving price forward until we actually get somewhere that creates momentum, we are further up in the range and we're still within the discount price zone. So it does look well when we're factoring it in from that perspective. So what we'll be waiting for just from a daily perspective is basically for price to tap into this higher time frame point of interest and then look for buy entries to go long. Now, if we drop down to the 4-hour chart, and I'll just remove that so we can clean up the price action a little bit more, we can start to identify our overall 4-hour trading range. And for me personally, the trading range that we're trading within is more in this area of price. So of course, if price does move to the downside to this order block, we will have broken structure to the downside. The 4-hour will be shifting to bearish, but that doesn't necessarily mean that we will be looking for longer term sells. It just means that the pullback on the lower time frames has to switch trend in order to tap into higher time frame points of interest. So I just delete this and we can just break up this structure a little bit more. So if we're just looking at price action here on the 4-hour, what we can do is we can look at this order block here and we can see that price has tapped into it several times, once here and another time here. And at this point, we're now building liquidity. We're building equal lows, basically showing that there are a collection of sell stops that are resting below here, whether it's breakout traders or people trading support and resistance, because we know if price does come back to this point, people will be looking to buy this at this point, quadruple bottom. Even supply and demand zone traders would consider that a demand zone. And if we just draw on something like that, we have a support and resistance flip zone where we have resistance, support, 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 support. So basically a lot of sell side liquidity resting below all of these lows. And of course, we have our daily order block that we're looking at right here. So what we can do is we can refine that daily order block to this candle right here, and we can take a look at when price when and if price does tap into this area, this would be one area to look at. One other area that we can also mark out would be this, which is the extreme of this move. And what we can see is that price has broken structure, and we've broken structure. And I know I've mentioned this in a few commentaries, but I just want to make sure that any of our new members that are joining us for the first time or just recently understand the logic of these particular areas. And effectively, what I would be waiting for from this 4-hour perspective is for price to break this sell side liquidity and then tap into this higher time frame point of interest. And since I have 2 points of interest that we've been able to refine here on the 4-hour chart, I'd basically be waiting on my execution time frame, waiting for a shift in market structure to then look for long entries. If we don't get that on this top zone, I'll wait for the bottom zone. And of course, if price just keeps pushing to the downside, I'm going to take a clue from the market, go back up to the daily chart and see what price action is doing. Because if we are looking at the 4-hour, and I mentioned this in previous commentaries as well, depending on how you look at market structure might change your overall views on how this market is setting up. Of course, me personally, I like to look for very clean and clear swings in price to mark my highs and my lows. So we can see that based on that logic, or how I'm viewing it, this entire leg is an impulsive leg to the upside that broke this structural point, these equal highs right here. But some would just look at something like this. We have a clear pullback. We do have increasing lows here. We have a high and then a lower high, lower low within these candles. So some would look at this as a low in structure and then would be able to say that we broke this high, which is why we'd use this as our low. So we broke this high, which then makes the trading range this move right here. And then once price breaks this low, then we start the bear trend. And as we can see, and this is something that I have, of course, taken note of, is that we are starting to see a series of mitigations. We're starting to see that overall bearish order flow starting to come into play. So it's something, of course, we can't ignore, especially we can see that price is starting to show a willingness to trade lower. And this would be our first inflection point to look to take it longer. And when we're looking at order blocks, we're trying to follow the money. We're trying to understand where price is more than likely bound to go. And this is what provides us the flexibility to trade counter trend and pro trend and still be able to bank high risk to reward trades. And we can see this very easily that we could have looked for buys at the first tap. When we got the second tap, this would have taken a lot more confirmation on my end, but the trade is still valid, as we can see. Of course, we also see that we have the point of interest that we could have looked to sell back into this point of interest. So even though we're looking at more or less substructure here, we can identify that this is an order block. This is also an order block, but since we have this more stronger price action up here, we would more than likely look here. But as we can see, this order block did get respected for a little bit. That's what created this swing low here with this higher low before we created this higher high within the substructure. So with all that said, we could have taken a sell here on this tap into it. We could have taken a sell here. This sell is reaching for sure because we would have waited for this low depending on how you looked at this. If you use type 3 mapping or type 1 mapping, because your low would have been at these candle bodies, you could have considered that a low. And that also shows the flexibility and the differences on how we view market structure. We've broken down the market structure mapping and break of structure identification into 3 types for that reason, because everybody looks at the market slightly differently. And I strongly urge and encourage you to really make sure you backtest the market structure profiles that suit your personality. Like I've said, that I use type 2, where I use the candle wicks as marking my highs and lows of structure. I like to see body breaks to confirm breaks of structure. So if I just get a wick break, I don't consider that structure. So for me, this would not be a break of structure if I considered that a pullback, which I don't. I also look for more clear pullbacks that create structure. But with all that said, again, we could have looked to take that sell here, targeting this order block. We could have then looked for a buy if confirmation was provided, and then basically looking to target this order block. And we could have turned around and looked at that sell. And these are things that I had mentioned in the prior commentary, at least the sell here. Of course, this was the beginning of this week, and this was Monday's price action. And we will break down this particular area of price because I do think it's interesting, especially given the fact of the entries model video that I dropped earlier in the week. I think that video will be extremely helpful for a lot of people, as it's a consistent entry model or set of entry models that you can use to take trades. And what I'm seeing, especially this week, is that these models are playing out perfectly. I did have a plethora of entry models, various entry models under the sun that had many different components and different frameworks, things like that. But what I began to realize, especially over the Christmas holidays and leading up till now, I've been doing a lot of review and case studies, things like that, just trying to refine as much as I can to improve my approach to then share that information with you guys, is that when I had 10 plus entry models, they were all very similar. And then that's when the real discretion, we'll call it, or the confusion might come in, because if I had a trading model that looked like this, and then I wanted to see some sort of equal lows, and then I wanted to see equal lows here, a tap of basically manipulating price action and structure, and then a tap into it. And I was trading here to look at that. But then if I had something like this, does this count? What model is this? What you can see is this is basically the same as this, because really we're only interested in this and we're only interested in this. What happens up here, we can definitely identify it, but that comes down to market structure and understanding market structure and really understanding the importance that market structure plays into this. The order blocks are not necessarily the full strategy in which we trade. There are entries, there are information, we're following the flow of money. But at the end of the day, we are still really deep involved in market structure and understanding what is happening. So that is why I think that we have such a powerful strategy, and why I think that those entry models that I've provided will be incredibly powerful. Now, I know many others in the communities have more entry models, more robust entry models, different entry models. And like I've said in previous videos as well, you really have to make this approach your own. So if you have different trading models that work for you, use those by all means. Don't focus on the ones that I've provided. I just wanted to provide very simple, clean and clear entry models that do work and that they work very well. And I'm hoping to begin to add on to those a little bit, add more refinements over time, especially through these commentaries, things like that, so that you can improve your strike rate. Because at the end of the day, if we're getting high risk to reward and we're able to filter out trades and improve our overall strike rate, that just improves our trading tenfold. And that's what I want to see each and every one of you do. I want you to be smashing high risk to reward trades, but I also want you improving your strike rate, so that way it doesn't affect your psychology when you take a few losses. Instead of taking 3, 4, 5 losses in a row before you take that one winning trade that does wipe away all those losses, if we can cut that down to 2 or 3 losses and then you get that winning trade, whether it's 10R, 5R, 15R, whatever, that's going to change your trading game, because a lot of trading is psychologically based. Once you have the framework of how to trade, once you understand the inner workings of market structure, you understand liquidity, you understand order blocks, and you understand the entry models and how to execute them on the lower time frames, the only real 2 bastions of importance or pillars of success that you need to focus on are your trading psychology and how to manage that, and also just understanding and improving upon your overall trading process. And the process doesn't mean the strategy. It means, how do you conduct yourself in terms of your analysis, your routine? When do you look at the charts? When do you do your analysis? When do you set your alerts? How do you conduct yourself when an entry is setting up? How do you review your trades? How do you journal your trades? How do you review the price action at the end of the week? How do you set up all your analysis for the week ahead? That's all included in your trading process. And for a lot of people that I've spoken to, especially recently, the biggest missing component to their consistency in trading is not the strategy. And in many cases, it's not the psychology. It's the process. It's the routine that you set within trading. And I urge all of you to really think about how you set up and frame how you do things on the charts. Why do you use the daily time frame? What do you use it for? Why do you use the 4-hour time frame? What do you use it for? Why do you use the 1-hour time frame? What do you use it for? Which time frames do you enter on, and why? How do you manage? Really just put that down to paper, so it's so much easier to manage, to understand. It's another component of your trading plan besides the technical analysis. It's the routine, it's the understanding of why you do that, and then also building that reason for why you journal your trades, how you journal your trades, and why you conduct ASR, why you conduct case studies, and what you do with that information. Because it's one thing to do the case studies, it's one thing to do the back testing, but if you don't do anything with the data, you're not necessarily wasting your time, but you're not making full use of it. And the biggest thing to trading and really learning any skill or anything in life, it's not just about how much time you put into something, but it's the quality amount of time that you put into it and what you ultimately get out of it. So really start to focus on that aspect as well. So you have your trading strategy, which we are learning here. We have our trading process, which is putting everything together and making trading individualistic for you. And it sets into what does your life look like? If you work a 9-to-5 job, if you have kids, if you have other obligations, sports, things like that, make sure that that's factored into your trading routine. Because if you're going to be on the charts when you're back testing, say at New York Open, but you're at work and you're not able to be at the screens, there's really no point in working towards that. You need to really set up your trading routine to be in favor of the way your life is set up. Yes, we all have goals of becoming a full-time trader, whatever that means to you. But in the meantime, while you're working full-time or whatever the case may be, if you can't commit to be trading, say, the New York Open, then you really shouldn't be focusing on that unless you've thought of a process to be able to trade the New York Open. Maybe you're able to check your phone periodically throughout your workday, and you do all of your work in the morning before you leave for work. You get up a little bit earlier, you settle your alerts, and once those alerts go off, you can quickly check your phone, whether you run to the bathroom, be a toilet trader, whatever, and you check the chart, say, I'm looking for an entry. This is this is what I'm looking for. You do all that prep work before you go to work, and then you make that happen. Great. But if that's not feasible for you, maybe you work in construction, you work somewhere where you just do not have the opportunity to be at a computer, to be on your phone, or you have applications that are blocked by your employer, then at this point, it's just, there's no point in trying to force that. It's just going to make you frustrated. So make trading work for you based on your routine, based on your lifestyle. So I know I went on a little bit of a tangent, but I really do think that that is incredibly important. And that was one thing that really helped me early on in my trading journey. I was trying to make trading my life, but really what I needed to do was integrate trading into my life and fit it around what made sense to me. Because at the end of the day, we trade for freedom. And if you're glued to the charts 24/7, that's not really freedom. Regardless if you enjoy it or not, you need to have that healthy mix between life and trading. So when we're looking at Aussie dollar, we'll continue on here. What we can see, like I said, is price has reacted off of this 4-hour block. Now, for me, like I said, I'm waiting for this low to be broken to really confirm that this was an order block. But of course, if we're looking at that intermediate structure, we can see that we have very slightly broken structure. We're seeing that very minor breaks of structure, and we can see that price is still caught in that overall range, but we know that it's tapped this block and we're starting to head down. So if we're looking at that, what would I be looking at more specifically? Again, I'm going to sit on my hands and wait for price to come into these order blocks for long entries. I'm going to wait for entry criteria to tap into this area. We're trading within this overall larger daily range. So at this point, I'm not going to rush anything. If I do see a sell entry, I may take that. But at this stage, when I'm looking at the 4-hour structure, really, depending on how you look at it, again, this would be my trading range, but you could argue that right now we're more or less in a trading range of this right here. So we're still waiting for either that low to break or this low to break here. So regardless, at this point, I'd be more or less sitting on my hands unless I want to play something more intraday to target this liquidity being taken out, which is definitely something that we can do. It's valid. It makes sense. We can build that case for entry. So if we drop down to the hourly chart, let's take a look at structure and see if we are trying to look for shorts, how would that work? What makes the most sense? So if we're looking at the hourly structure, what we can see is if we just kind of work back here, we can see that price came down. We made a low here. We broke that low. So the high that I would personally be looking at would be this one. We've broken that high. So we're starting to switch the trend to bullish. We've created this set of equal highs, and we've since broken those highs, broke these highs, broke these highs. And then what we can see is price tapped into the order block. We made some equal highs, but we can see that price more or less on the lower time frame swept the liquidity of these highs here. So we're just looking at that. And of course, now if we're looking at what low was broken, there's two different points. So if I just zoom in, again, this comes down to your interpretation of market structure. And the reason why I like to mention your interpretation versus just mine, because I might say one thing, you might disagree with me, and we can both be right. Totally fine with that. So what we can do is when we're looking at this bit of price action, me personally, the low that I would be looking at would be something like this. This is a clear low, absolutely. But we do see this nice pullback, and then price moves to the upside. But of course, some of you may look at this point as structure, and there's nothing wrong with that. We do get a lower high, and we start to see lows increasing here. I don't think that's as clear, but if you use that, no worries, because we end up getting to the same point. As you can see, we break structure right here, my break of structure would be more right here. There's really no difference because there's really nothing actionable. It's 8 pips. I'm not really going to fret over 8 pips. So now that we got that out of the way, we can look at the current trading range that we're looking in. So if we're looking at that, like I said, we broke either this point or this point. Regardless, we would look at our highs. We have this as a clear high. And really, to me, you could also use this high, but for me, the highs are still getting lower. This is more of just a pullback in the market. Again, this comes to interpretation, but for me, I would be looking at this as my overall trading range. So if I'm looking at an order block now, I want to look for a sell to get involved to basically take out any of the sell side liquidity to target this higher time frame order block. So the last sell candle, the last buy candle before the move that breaks structure, we have this one right here, which is at more or less the extreme of this move. We can see that we have created imbalance right here. Nice solid order block. And what we can see is, again, if I just mark this on, this would be the structural point. I'll also mark this one on just for those who may consider that a break of structure. So we'll just change that to a dotted line just to show that it does exist. And then if we just look at substructure as well, we can see that we're starting to make a series of breaks of structure. So we could also argue, especially with this one here, that the origin of the move that breaks structure of the range is this order block here. And what we can see, like this zone here, we do have a small bit of imbalance that has been left. This candle attempted to retap into that price, but was unsuccessful in completely clearing the imbalance. So if we're looking at that, these are 2 points of interest that I would be looking at for the week ahead to look for sells. Again, to target the sell side liquidity and then tap into the bullish order blocks down below. So again, if I just go down to the 15-minute chart, let's just take a look a little bit further. Let's refine these. So what we can do is we can refine this top one to this candle right here. As we can see, this is when the momentum came into the markets. We can see that imbalance was left and we continued moving to the downside. And similarly to this one right here, we can see that we have this candle right here. That's the move that created the imbalance. This imbalance is definitely bigger than this one, but this candle filled the majority of that imbalance. Now, if I'm looking at a trade, so when all I'm going to do right now is I'm going to add an alert here and here. I'm not going to do that now because I like to add a description of what I'm looking for, but essentially that's what I would be doing. So if I just do this just for safe measure, just to showcase this one, click that, I'm going to add an alert, just going to add it. And what I can do is, this doesn't help me. It's not interesting. It doesn't give me a quick idea, because if this taps at, say, 4 o'clock in the morning and I wake up and look at it and I'm, tired, it woke me up, I'm not going to really know what the heck I'm looking at. It's going to take me a few seconds. So if I give myself a little love note that says what I'm looking for, it just makes things so much easier. So I can say price tapping into 1 hour extreme or origin OB, look at lower time frame for entry models to go short. And I can even do target equal lows, yada, yada. And basically now I have that alert set, and I can do the same thing here as well. And basically what that's going to do is, once price gets to about this price, I'm going to get that alert on my email as well as my TradingView app on my phone. And I'm just waiting for price to then show me an entry model. So if I go down to, say, my execution time frame, just to show what I would be looking for, and it'll be the same at both points. But once price gets into this zone, I personally am going to be waiting for it to tap into more the 15-minute zone. And basically what that'll look like is I'll be looking for something like this. Again, this is a confirmation entry, as I've explained in the most recent video, as well as all of the previous videos, so nothing new here. But basically looking at an entry, a risk entry within this confirmation entry, or the confirmation entry within the confirmation entry. We might not get this entry, we might not get this entry, but I'm preparing and planning for either option, because I can see we've broken structure, and then broken structure. So that's how I would be framing out my trade. This is the model I would be looking for, or a variation of that. Like I said, there's 2 variations that I shared, which are very similar. We just get equal highs, then a break of structure, a tap into that order block, a break of structure, a tap into that order block and go. So you'd have your risk entry here, your confirmation entry here. This is just liquidity. Even if you look at it from this perspective, when it takes out this high, breaks the structure, and then breaks this structure down here, this is basically the market or price taking the liquidity of the prior high before it breaks structure and then continues to the downside. So that's how I'm going to be looking at it. And again, if I don't get this price action footprint, I'm not going to take an entry. And it'll be the same thing if I'm looking at this. I'll wait for price to come into this order block and show me this exact same footprint. If I don't get that, I'm not going to trade it. Now, one other thing that's come up, or a question that's been asked about this, I've seen some losses, is what if price does something like, we'll just do it with this zone here. So if we do this, we tap into it, we break that high, we come down, we do that. Everything's looking good. Maybe you're in a little bit of profit because you took that risk entry, or maybe you get that confirmation entry, price does this, and then it does something like this. So there's nothing inherently wrong with this, because what we can see is we did get our entry model. We have our risk entry. So whether you took it at the risk entry or we have our confirmation entry, because we are breaking structure, but in this case, price still continue moving to the upside. And then we seen the risk entry here, the risk confirmation entry here, break structure, break a structure. So we're looking at that. The biggest thing that I can recommend, encourage, explain, however you want to frame it, is if you get the pattern when it just taps into the order block, I would take those with a grain of salt. They will play out for sure, but more often than not, price will tap in deeper into the block. And this is almost what you'll see is liquidity, because what that looks like, and I didn't mean to draw it that way, but this is kind of what a segue into the next segment of this is, more often than not, what you'll see is price is forming liquidity within the base of the order block, and then price will then tap into more of the equilibrium of that block or a more refined point. Because if I look on the 1 minute, again, I didn't try to do this, but we can refine our order block to this point right here. This is the extreme of the 15-minute order block. And even if we're just looking at price action, this is the last candle before the real momentum came into the markets. Let me just zoom in just a little bit so we can see that a little bit cleaner. We can see that that is the true tipping point of this order block. So what we'll see is, and again, I didn't try to draw this. This actually just worked out perfectly for this example, but we have the equal highs. It looks like our entry model. It comes back in, forms an even clearer or cleaner entry model, and then that's where we get the sell. So a very slight minor refinement or variation of the price action model, but it's looking at those little clues. And this is ultimately how you can improve your strike rate just that little bit to gain a little bit of an edge when you see that. So something to take note of, and I wanted to quickly address that. But that's effectively how I'm going to be looking at Aussie US dollar. I know that overall we're in a bull trend, but using my initiative and planning what trade I'm actually looking for, I'm looking for the buys here, and the logic will still be the same that I'm taking on those sells, but I'll just be looking at it in the inverse, looking for that exact buy model, or even something like this, which is easy to draw that way too. And I'll just be looking for that once price comes down here. Obviously right now I need to trade the price that I see and plan for what I'm expecting. And the beauty with our strategy, as I say all the time, is that we can take this trade and then we can also take this trade. And there's nothing wrong with that. That's the way we should be planning our trades if the opportunities present itself. So that's how I'm going to be looking at Aussie dollar for the week ahead. One thing I realized after my tangent about trading routine, process, things like that, is said I was going to dig into this bit of price action and I didn't. So I'm going to edit this in so that it makes sense. So basically we see price taps into this block. We tap into it much deeper. We hit that equilibrium point. If we go down to our trading time frame or execution time frame, or the execution time frame that I personally use, we just take a look at price action, and what we can see right here is we create a low, we break that low, we look at this as our high, and when we look at that, price breaks that high, we form this high right here. Now, of course, there's two different ways you can look at the high placement as well. I should note we have this high, we also have this high. Again, this comes down to how you personally view market structure, but 2 points right there. And what we can see from that, if I just take a replay tool really quickly, just so we can look at price action. So we have this move right here, put a line, just do it right there. So we've broken that bit of structure, we've broken to the upside. We're now in a more or less unconfirmed bull trend. So basically, if we're just looking at that, we're seeing that. And what we know about that is we can look at the risk entry. Now, of course, when we're looking at this, we can look at it in two different ways because we have two different opportunities or two different points of interest that we can take note of. So we have the extreme point, but what we can see is price is pretty efficient leading up to that. But we also have this point right here. And let's do that. So we have that point, and what we can see is if I just play price forward, you can see that price comes in, taps into it like perfectly, and continues moving to the upside, taps into a second time, a third time, a fourth time, and then break structure. So we'd be able to move our trade to break even from there. So if I just put that on just like that, and what we can see is now that we've broken structure, so what we've done is instead of this model has changed ever so slightly. So it changed from that. Actually, let me just redraw to be easier. So if we do this, we have our move, we break structure to the downside, we create an intermediary point of structure, and then we break the structural high. We've come down, we're going to come back up potentially and basically look for an entry. So if I just quickly draw on this is the exact price action model that I spoke of. It's just a very minor variation of it just because we get this slight pullback in price. So we do get two potential order blocks that we can take on more or less the risk entry side of things. We have the origin, and then we have more of the decisional. And what we can see is we broke with a wick here. Even if we use this point, we broke with a wick. So our chances of returning back to a decisional order block when we break by a wick, increase. And what we can see is that does play out in our favor. And then of course we can now look for a potential confirmation entry if we missed this entry or didn't feel that it was the highest of probability. One thing we also should keep in mind though, just for informational sake, is that we do have a set of equal lows forming. It's more of a support zone. What we can see is even if I just draw that in with a slightly different color, you can see that we have support, which is in line with our order block as well. And what we can see is we have this bit of structure right here, and this is a potential order block. This would be our confirmation entry. And the interesting thing about this is we do have liquidity resting above here. So a lot of traders would be looking to take buys here, and if price comes down, taps this order block and continues, they're going to sit there scratching their head, and then we might see some trend line liquidity. But if we just play price forward, we'll see, do we tap into that order block or do we continue to push higher? And what we can see is we tap into the order block almost perfectly. We do get a little bit of a spike through, but if I just play price forward, we'll just end the bar replay and navigate back to that bit of price. We can see that this is a point that price respects on the 1 minute chart and continues trading to the upside. And what we can see is this would have been a very effective long entry into this order block. So if I just play on, let's do the second entry. I will do both just to show the power of the risk and the confirmation entry models that we can take. So if I just size this up, so it'd be a 1 pip stop loss. I personally don't use that. I'd use at least 2 pips. I recommend 3, but that's up to you. So we do that. And then we can also put our entry on here. I would factor in these wicks for sure, but again, 2 pips, wouldn't really want to go underneath that. And if we just scrunch up the chart, where is the most reasonable or highest probability or best target to pick? So if I just go to the hourly chart, we know that we have an hourly order block that we'd want to be targeting, more or less the base of the order block itself. And what we can see is our risk entry provides us with 55.35 R, and our confirmation entry provides us with a 54.3 R. So if you took both trades, well done. That would have been 100 R that you could have captured. Of course, you take partials out along the way. You might take some partials at a swing high here on the hourly, a swing high here. We did form some equal highs as well. So once we grab that liquidity, that's a good spot. There's also another spot here. Basically, partially out based on structure. And what we can also see here on the hourly as well, this one isn't as clear, but we create this low, we break the low, we tap into structure here. We do get this substructure order block and then continue to the upside. We get this order block, but we don't quite reach it. But if I go down to say the 15-minute chart, we'll just see if this clears up structure a little bit. Get rid of some of these lines again. And just take a look. See, that's still not the cleanest. Might be on the 5-minute chart. Let's take a look at that one more time just to see if another entry model has popped up in and around the same spot. And what we can see is we've broken this low. We broke this high. We also have a 5-minute risk entry right here. If we tap into here, we can see that we have an order block here. And does it tap into the order block? It does. Would you look at that? So we also have within here, we had our 1-minute confirmation entry. We had our 1-minute risk entry, our 1-minute confirmation entry, but then also within it, we have a 5-minute confirmation entry and a 5-minute risk entry right there. And that just shows the power. I'm not going to go in any more detail on this move, as I know the commentary is already quite lengthy, but I realized when I was doing some editing that I mentioned I was going to break down this price action, and I totally did not do that. So I wanted to just do that because, again, I do think that this is interesting price action, and it just shows the entry model and really how powerful it is, whether it's on the 1-minute time frame or the 5-minute time frame. Price is fractal, and it's going to continue doing that. And this is ultimately why I broke down my entry models to these few variations, because they're powerful, they're clean, and they're easy to understand. So I hope that was helpful. Now let's take a look at pound US dollar, and we'll start on the weekly chart. And when we're looking at the weekly chart, we can see the range that we are currently trading in. We have our recent high right here. As we can see, we're just making higher highs and higher lows. And the low of the range in question that I'm looking at is this candle here. As we have a pretty clear pullback in price. This is a large weekly candle, and price has then moved to the upside. If I mark on this point as well, this is the prior weekly break of structure. So we can see that we've broken structure to the upside, and we're starting another bull trend, or continuing that bull trend rather. And this is how I'm framing up the weekly chart. So let's drop down to the daily chart. And when we look at the daily chart, what we can now see based on the weekly chart as well, and we're just building that case for entry and reason for prices to continue trading higher. We can look at price. We've now broken this swing high, but if we're looking at structure, we can see that price broke this high, broke these equal highs. This was the impulsive move. This would have been the previous high in question. So either way, depending on how you map, again, you still get to the same spot. And what we can see is we have this break of structure. So what I am looking at is this point of interest right here. This is our daily point of interest that I'm looking at. And I've actually shared this breakdown and the breakdown of the trade that I took on Friday in the GBP USD analysis channel. So feel free to check that out as well. But I'm going to be looking for price to trade into this point of interest, and then I'll be looking for a long entry to then break those highs. And if we look at this pair a little bit more in detail, what we can see is if we just look, we can see that price has been more or less showing bullish order flow overall. You can see that an order block gets formed, it gets mitigated, and price continues to trade higher. And we can see that time and time again. So from that perspective, it just builds that case that price is moving nicely to the upside. We can't help but see that price is starting to more or less struggle every time we break a high. It doesn't tend to trade that much higher before we get a pullback. But we also have to take into consideration, who are we trading against? How big are their pockets? And what are their ultimate goals? Their ultimate goals are to build liquidity, catch traders on the wrong side of the chart. And I know many of you would have been looking at it in this way from prior trading groups, and I would have too about a year and a half ago. Basically, we have this ascending channel. We'd be looking for that sell. And it's not to say that's not going to happen, but this is going to start to build more liquidity. We're seeing that choppy price action, as many retail traders would call that. What this is more or less just a lot of orders changing hands. So as of right now, I'm going to trade what I see and how I am viewing this based on what I think. I can see the bullish order flow. I can see that we're in an uptrend. I can see that on the weekly chart. I can see that on the daily chart. I can see a point of interest within the daily chart that I would be looking to take a trade on, because we have broken structure to the upside. So when we go down to the 4-hour chart, we can clean things up and we can look at price action in its current form. Now, again, I'll reference the breakdown or analysis that I posted in the GBP USD channel in our Discord. And the way I broke it down was I wanted to refine this extreme or this daily order block, which we would refine to this candle right here, which is, this is the last bearish candle before the bullish move that breaks structure. So we'll put that on right like that. And we, of course, refine it to this candle because this is truly where the momentum has come into the market. And we can also take note of the imbalance that has been left right here. And what we can also see when we're looking at the 4 hour and starting to look at the market structure on the 4 hour, we had price create this high, again, like on the daily, pull back and then break the high. So this was our daily break of structure, but it's also a 4 hour break of structure. So what we can see quite clearly is that price has now created a new trading range on the 4 hour chart, which is this trading range right here. And what we can see is if we just mark on this as well, this is our premium versus discount. We want to take buys within the discount area and take sells in the premium area. So when we're looking at that as well, we can see that we've broken structure and we've broken structure. And when we look at that, we can also identify an order block within this 4 hour trading range, which will be this candle right here. Of course, we have our bearish candle before the up move that breaks structure. We can then refine it to this candle because this is truly where the momentum has come into the markets. And again, we can see that there's also imbalance that has been created just above that block, as well as this candle and this candle, which we've since filled. And as we can see, we've tapped into that block and started to push away. So now if I just delete that, clean up the chart. Again, if we use the daily impulse as well, or the daily trading range that we're trading within, we can see that when we look at our premium versus discount array, we can see that the daily order block that we were looking at is also within the discount zone. And I've spoken about this in the past commentaries. It's not something I bring up very often, but it is such a game changer when you are looking at order blocks and trying to figure out what blocks to take entries on and which ones not to take entries on. When you're buying, you want to be buying in the discount area. So basically anything under the equilibrium point or the 50% of the Fibonacci, which is what this indicator or tool is. And if I'm selling, I want to be selling within a premium price, which would be the top portion of the range in question. And of course, when we're looking at this and looking at the daily move, we can see that this is more in premium pricing that we're buying, but we were framing this up on a 4 hour chart, and then we can use the 4 hour range that we're trading within right now, which is this impulsive leg, which is why this order block is still valid. But of course, I'm going to be still focusing on buys within this because we could very easily come back up here. This could be a point of interest, although it hasn't broken structure, as we can clearly see, but just reading between the lines, price could then come down, tap into this, and then that could be our true buy. But we can still take buys here as long as we're a little bit more aggressive and we make sure that we take care of our downside risk, most importantly. So now that we have that and we understand that, we can go down to the hourly chart and we can look at price a little bit more in detail. And it's going to be very similar to the 4 hour range in question as well. And what we can see is that we can refine our 1 hour zone to this candle right here. And as we can see, just looking at it, we can see that price has tapped into that 1 hour zone and actually broken it or pierced it and then continue moving to the upside, which is totally fine because we would be using a lower time frame to actually execute a trade within this. We wouldn't necessarily be taking it on the 1 hour directly. Now you could, but you would need to factor in maybe a little bit of this structure. And that's not personally how I trade. So I'm not going to really touch on how you would manage your stop loss within this, but just pointing out that we did break the 1 hour zone, but it was still respected overall because it respected the 4 hour zone more than the 1 hour zone. Now, if we go down to the 4 hour block and the daily order block, we can refine our order block to this candle right here or this candle. I mean, they're basically the same. This is when the true momentum comes in. And if I just move that down just a little bit, we can see that we have that imbalance that exists. And an interesting thing to note is we have this set of equal highs that are taken out. And what do we notice? We have this bit of price action. We tap into it and continue off. So that is an order block play that could be made, especially if we're just looking at price action. We can see we've made lows. We've broken that low. Our high would be here. We broke that high. We didn't return back to the origin, but we were able to tap into this. So effectively what we're looking at, and I'm getting off track a little bit, but I'm just trying to explain the entry models as best as I can. So we don't go back to this point, which would be our more or less risk entry. And then we continue moving to the upside. So we've broken this bit of structure right here. We've broken this structure, confirming a bull trend. We create that point of interest, price taps in and then continues off, which is what we'd be looking at in this bit of price action here. And that just shows the fractal nature of the markets and the patterns in which that we trade, or the models that we trade. So now we can, like I said, refine it to this order block. So we have our order block set up. And again, I have my alert set already at 36 or 136. And you can see this one's maybe not as detailed as the one I did in Aussie dollar, but I have a little description: approaching daily POI, looking for longs. I know what that means, but that's what I just tell myself. I want to be able to give myself the best little bit of information to actually take a trade. So what am I going to be looking at for the week ahead? Well, I did take a buy at this point on Friday and closed the position out for 4.1% with a couple partials along the way as well. And basically what I'm expecting, or what I'm looking at now, is what we can see even on the hourly chart is we've changed structure within here. We've created this high, we've broken this low. So we're starting to create a 1 hour bull trend. So we could also look at this as an order block to look for an additional entry or re-entry if you missed or got taken out of this trade long earlier. So we can also look at it that way from an entry model point of view. Again, this would be more of the risk entry. So if we looked for price action to break this high and then come back down, we could take that and look for longs. My initial targets would be more or less these points, these equal highs, as well as this point right here, because on the hourly chart, if we just look at it, we can frame that up as a order block here on the hourly chart, because if we look at this, we broke structure right here. So our high would be here. Now we didn't break any lows. So we're reading between the lines a little bit on the substructure. We can see that we created this low, basically created these equal lows more or less, and then we've since broken those equal lows. So although we didn't get a true break of structure, this is a sub break of structure. And I have had some questions on substructure versus key structure or major structure. And a word of caution with substructures: you can have some very lucrative trades trading substructure. As you can see, if price does come up here, gives you an entry criteria and then sells off, you can definitely take those trades. But a word of caution being that you're not really confirming structure, more or less, because if we're looking at this, we could use our low as either this point or this point. And in this case, when I'm looking at this range, I was looking at this as my low, as this was a more clear pullback in price. We can see that we've created a low, but of course this is our 4 hour swing low as well. And based on that, when we're looking at that, we would need to break either this low or this low. And even if we look at price action, we didn't actually break that low, so we would still be trading within that range, which would be bullish. But if we're looking at it from a sub market structure or minor market structure, we've broken minor market structure to the downside, so we could look for that entry there. So basically all that said is I will be monitoring how price comes into this block more on Monday morning. If it happens on Sunday, I probably won't take any trades. I tend not to trade Sunday evenings or the Asian session, which is the combination of Sunday evenings for me in the Eastern time zone. But essentially would be looking for something like that, and then more than likely a move to the downside. I would not be surprised if price comes down and then moves back to the upside, especially wicking more or less this area, because what would that be doing? That would be creating equal lows, which would give us sell side liquidity and then grant us the ability to look for long entries here. That's ultimately what I'm looking at this point. But that's how I'm going to be looking at pound US dollar for the week ahead. Really simple. I may look for a re-entry at this point, but my ideal buy scenario will be here. I may also look for a sell here if price action gives me what I'm looking for. And this is again where lower time frame executions with strict entry criteria or entry models come into play, because if I just draw that on and I execute on either the 5 minute or the 1 minute, depending on a couple of factors, usually on how clear price action is at the time. And I'll dig into that a little bit when we look at the pound US dollar trade that I took. But what I'm going to be looking for is price to show me that model, and I will definitely take more of a confirmation entry on this. So I won't take the risk entry. I'll only look for that confirmation entry. And if price doesn't give me that, I won't be sad about missing the trade. I may look for an opportunity to go short if we start to break structure to the downside. So say price comes up here, then short goes short, and then does a pullback, whether it be here or we create some sort of substructure, a nice block right here. Then I would look for, let me just do that. And then I would look for something like that. Again, this would be a lower time frame execution, and I would look for a confirmation entry of sorts to then take that short with the larger idea of taking the sell from this order block, with the larger idea of taking the buy at this higher time frame point of interest. Again, I have my alert set for 136, but I would prefer to see price come more down towards the 135.5s and actually tap into this 1 hour order block. But if I get some solid confirmation that comes in at least deep enough, then I may look to go long. But that's something I'm going to assess when price actually gets there. So that's how I'm going to be looking at pound US dollar. But what I want to do now is I want to just quickly jump into the recap of the trade that I took, because I think that there's some key lessons that we can definitely gain from that trade. And it was just a really great trade that played out really nicely. So I'm just going to bring this chart over, saves me some time. So this is the chart that I sent to the community in the pound US dollar chats back on Thursday mid-afternoon. It was about almost 4 p.m. Eastern. And again, this is exactly what I pointed out when I was looking at the commentary, or when I was framing up the commentary just a few moments ago. So what we can see is I was looking for a buy. I even have the entry models that I'm looking at for those particular areas. I have my trading ranges set up on the 4 hour and the 1 hour just to really call out what I was looking at, as well as the premium versus discount areas. So what I did once price came into this area, I got my alert once price tapped in here. This was at 3 in the morning. I haven't been trading London recently. I've been favoring my sleep schedule and trading New York more recently, and it's been a savior to my own well-being. So it's something that I'm starting to focus on a little bit more. So I didn't take the entry here, but I had a few people that questioned why this entry didn't work and, why I didn't take it. One reason, obviously, I was sleeping, so that's why I didn't take it. But the biggest thing was what I spoke about a little bit earlier on Aussie US dollar, and seeing that price taps into the block, but doesn't really tap into it very deeply. As you can see, we tapped into it, then we ran to the upside, breaking structure. This is a really nice impulse, mind you. So if you were looking at or did take buys at this point, this order block right here, there is absolutely nothing wrong with that, because this is a clean move overall. We can see that that's a solid impulse. And if I go to the 15-minute and just move back to here, we can all agree that this is a solid impulse. The only issue is on a 15-minute chart, we haven't actually broken any clean structure. If I just look at this, the trading range we'd be trading in would be more so something like that. We didn't break structure to the upside. This is a more or less minor structure point, if you will. So that is one clear thing. And of course, on the 5-minute and 1 minute, we did break structure. So we did get the valid criteria of the risk entry. You can see we had this point. We broke this point. We went to the upside. We created that order block, and then we did get a little bit of a reaction, but more or less would have been taken out by these wicks right here. And this is why when you are looking to take trades, sometimes taking that confirmation entry within a confirmation entry makes a little bit more sense, or is a little bit safer, or will help improve your strike rate essentially, because this would be the risk entry within that higher time frame point of interest. Of course, this is what we would call a confirmation entry, but this is a risk entry within the confirmation entry. And we can take that as our first entry. We'd be looking at something like that. But what we could then do is just wait for this point. So we've broken structure, we've formed another point of interest, and we've looked for that to take long. This is the more safer entry. This is the more risky entry. And in this case, we didn't get the confirmation entry because price did not move to the upside and break structure. So that's something you can do when price taps into a block more shallowly. As we can see here, is instead of taking the risk entry, look for the confirmation. I keep saying that. We're looking for the risk entry of the confirmation entry. So the confirmation entry is, the reason it's a confirmation entry is because we're looking in a higher time frame order block, the 1 hour and the 4 hour. and we've dropped down to the lower time frame. We've seen that shift in market structure. We haven't actually confirmed that this is a bull trend until really the second break of structure, because like I had mentioned in the entries video, what this could have been, this break of this high right here, or this move to the upside that breaks this high rather, this could just be a take of liquidity that forms a FU candle to then trade lower basically. So something to keep in mind. So the safer route when it goes shallow would be to take it at the confirmation within a confirmation entry, or the safer entry, whatever you want to call it. Not really great with names, so this is what we got. But basically, if you take that second entry, this would have avoided the initial loss, whether you took it on the 5 minute, whether you took it on the 1 minute. If you were waiting for that confirmation entry, as you can see, we didn't actually break structure to the upside. We would have been trading within this range, and we ended up just breaking structure to the downside, so we wouldn't have gotten this second confirmation entry. Another thing to also take note of, and this is also another reason why when I looked at it, I also kind of had that feeling that we probably wouldn't get a confirmation entry, because of course, when we look at something like this, if I just take this back, we look at this, we can see that clean impulse. We would have, say, our order set on this order block. We're going to take that risk entry because it looks good kind of thing. Price comes down, we get tagged out, we're a little bit annoyed, but we're going to take that confirmation entry. That's fine. We haven't actually broken structure, so we're waiting for this structural point to break. When price starts to do essentially this is what prompted me to start to revisit or look at this trade and say, maybe this doesn't make sense. This is around 6 a.m. So this is actually when I was looking at charts in bed, but we can see, what are we doing? We are creating equal lows. We can see that on the 15-minute chart. It's a little bit unclear on the hourly chart. You can see more consolidation. We can see on the hourly chart, and this might induce people to want to buy, is looking at this wick that comes into the block. We can get this retrace candle. We come back into the block and basically keep pushing lower. But if we're looking at the 15-minute chart and even the 30-minute chart, we can see equal lows, this overall support zone, if you will, being formed. Even if I drag that over just a little bit, I'm doing this on the fly. I don't actually know. It's a reach, but you have resistance, support. So manipulation of that zone. What does that mean for us? We'd be looking at this as sell side liquidity. So when we're factoring all that in, that also gives us a little clue that price is probably going to dip lower to take the liquidity. And that is effectively what price actually did, as we can see. I'm not really sure that's the entry that I put on. Confusing myself here. So let's take off the replay and we'll just look at the trade in itself. So I got to my desk around, it was about 9 o'clock when I was actually at my desk. Before that, I was just looking at price action on my phone. So if I just take price back to here, so what we can see, get rid of that too. Now what we can see when we're looking at this bit of price action is price came down, we created a low, we've broken that low right here, which meant that our high would have been right here. We can see that we've just barely broken that high. So our new trading range would be something like this. And what we can see is we do get that break to the upside. And this is where we got to use our initiative and kind of look at price action. So I'm just going to move this a little bit closer as well. So when we're looking at this, price broke this high. How did we break it? We basically broke it and immediately pulled back. This is not really a strong break of structure in my mind. What did we do immediately after that? We broke structure to the upside. So we can look at this point as our low, or again, depending how you look at it, we can use that point as well, but let's just use this clear bit of structure. It gives us the same ending kind of result. So we've broken that structure to the downside. If you were looking for an order block, you might look at this point, but one candle looking at this succession of poorly broken highs would not give me the best or warm fuzzy feeling to look for a buy. In this case, I want to see a little bit more commitment and I want to see a little bit wider trading range. I want to see that volume is being pumped into the markets essentially. When I see this, we have this high that gets broken impulsively. It leaves a lot of imbalance. So what I did was I set an order right here with a stop just below this wick right here. So I had my stop loss underneath this wick and was looking to take the entry long. This would have been, again, the risk entry. We have a nice break of structure. We haven't actually confirmed that we're in a bull trend again because we have broken to the upside, but we were still showing a downtrend. But I was willing to take that risk because we are deep within the block itself. And what we can see, what does price do? It just kind of hangs out a bit. it gets very close to tagging in, but did not tag in, and then continues to move to the upside. So what I did at that point was I looked at this point of interest. This was my next order block, my next entry area that I was looking to take a long at. If I just put that right there. In this case, I had my stop just underneath the block, because if I did this, then I'm basically saying if price comes down this way, it's more than likely going to tap into this. So the more logical place at that point to put my stop loss would probably be way down here, which there's no big deal of having a 7.5 pip stop loss, but I basically just decided that that wasn't the case for me. And if I just keep playing price forward, move this out of the way, you can see that price then breaks structure again to the upside. This is where I pulled my order, and either way wouldn't have gotten tagged in to the trade. And price began moving to the upside right here. And this is where I started to look at it in a couple different ways. Started to see that price is running away from my entry on the 1 minute chart here. We have reasons for price to come back down to this side. We can see that there is a small bit of imbalance here, but I'm starting to see price move away quite rapidly. I want to take a look at what is the 5 minute showing me. This is ultimately what convinced me to take the trade or base my trade on. So I seen that price has broken structure on the 5 minutes. So what we can see if I just look at this is our trading range is here. And then I took this on the substructure using and factoring in the 1 minute. I also want to add that because obviously the clear structural point from the 5 minute would be either here or right here, or you can even use this point, which is the 15-minute high. So we'd be trading within this range. We haven't actually broken structure to the downside on the 5 minutes. So of course, anything that's happening right here is substructure. And that's how I built the trade. So I just wanted to get that out of the way. I'm using the 1 minute, understanding the fractal nature of the markets and that it's going to build in the 1 minute before it builds in the 5 minute. And I seen price action breaking a high within the substructure. So I seen essentially this break of structure right here. Our risk entry could have been right here if we were looking at the 5 minute. Then what do we get? Another break of structure. It forms an order block right here. This is the down move candle before the up move that breaks structure. It leaves imbalance, so it has all the criteria. And even if I'm just looking at it from a refinement perspective as well, this would be the down move candle before the move that breaks structure. And what we can see is price taps into it, or so it appears based on this 5 minute time frame. So we can actually just refine it to this candle, and that's ultimately what I did. So I set my entry right here and I put my stop loss just slightly below. It was a 6 pip stop loss at the end of the day. And what we can see is I actually set my order once we broke this swing high as well. So actually I'm forgetting my trade already, but price broke this swing high. So I actually got a clear break of structure that then prompted me to set my order. It wasn't actually that previous candle, but I was looking at this minor structure breaks before I framed up the trade and then started to build essentially this price action model. So what we can see is here's our order. We didn't get tapped here, but we did right here. It was actually a really nice fill. Once price broke this high right here, I moved the trade to break even. And once we broke this bigger structural point, which is the 15-minute swing high, so we can see we broke structure here. This is our trading range within the 15 minutes. So once we actually broke that structure, I was using it on the 5 minute chart, but we can see that price does move back to the upside shortly after. But I, again, was using that as kind of more of a partial target versus a definitive break and close above on the 15 minute, just using it. Yeah. So as price tapped into that, I took a quarter of my position off, left my trade at break even, and just let the trade play out a little bit more. I thought I was going to get stopped out here. I was ready for it, to be honest. I think I even posted that in the GU chat because I had noticed that this could also be a point of interest. You know, we broke this structural point. Once we broke this high, we created this high, we pulled back, and then we broke the high. So this is a potential point of interest. This is an entry area that we could be looking at here on the 5 minute chart. And that was totally fine if I got stopped out. I took a little bit of profit. I paid myself a little bit. And if I got tagged out, no big deal. One thing I was also questioned about is why I didn't trail underneath this low to give that little room for price to tap into that. And that's totally valid. And that's something that maybe makes more sense going forward. But based on my trading plan as it is right now, once price breaks structure on my entry time frame, I moved to break even. Something I may start to test a little bit more and integrate into my trading plan is if a point of interest exists and I've taken partials instead of moving to break even, I keep my stop loss slightly below that. So I'll take a smaller loss. And if you factor in partials, it would probably not be a loss at all, depending on the R value of the move that broke structure. So that is something I'll definitely look at in the future, but not something I did for this particular trade. And what we can see is price then moves to the upside. It breaks structure one more time. And I partialed out another quarter of my position at this 5-minute break of structure. I was being aggressive with this one only because it's Friday. I wanted to get in and out of the trades. I don't personally like to hold trades over the weekend if I don't have to, especially with coronavirus, Biden taking the reins for the US dollar, Brexit, anything that has happened in 2020 and 2021, holding positions over the weekend is just not something I want to do. If price gaps, I just don't feel like dealing with that. So that's why I managed as aggressively as I did. And what we can see is price then pulled back. So partialed here, I partialed right about here. So almost at the extreme highs before the pullback. Was nicely timed, and price then pulled back. And once it broke that high right here, I had moved my stop loss just underneath this swing low here. And then as I was looking at price action, and I moved up to the 15-minute as well, which is also why I moved my stop loss to this point. But I also wanted to be a little bit more aggressive. I took some partials in and around this spot as well, and decided to move my stop loss just below this more or less small swing in price. It is a swing low on the 15-minute chart. And on the 5-minute chart, it is a little bit of a pullback. It's not the cleanest, but it's just where I put my trade. It was about right there. And what we can see is price then came down and tagged me out of the trade. So altogether with the 3 partials out here, and it was, I think right here, I partialed out the last little bit. I was able to secure 4.1% on this trade, which was a great trade. The duration of the trade was about 5 hours, which was not too bad. 4 hour in 5 hours, I'll take it on a Friday. So that was the trade. That was the reason that I took it. That's the reason why I didn't take it right here. I was sleeping, but also a couple other reasons that we've talked about. And really, one last thing to highlight was just how on point the entry model really was for this particular setup. We had, this substructure break, risk entry here. There's your confirmation entry, risk entry, confirmation, risk entry creation. There would be the risk entry, actual entry, confirmation entry creation. This would be the confirmation entry, which is exactly that point right there. Let's clean that up. And what we can see is price basically did this. This didn't quite come to give us a risk entry. So not really a big deal, but what we can see is that's the entry model that I took. If we look at it on the 1 minute, we can just look at it a little bit cleaner, but I didn't use the 1 minute for this trade once I actually entered it, but I used the 1 minute for the substructure to then take me to the 5-minute structure to look at something a little bit cleaner. Once I'm starting to see the momentum here on the 5-minute chart, basically reading between the lines to understand what makes sense on how to enter, things like that. So we'll just play price forward a little bit more. And as we can see, we just started to see a more clean pullback, or really nice retrace, about 14, 15 pips. And this is where price currently is. And that's so simple. Really, you can keep it. The price tapped into the zone, the point of interest, and then I looked for my entry model, my entry criteria, and that's what I used to take entry. If I go back here, you can see that this was effectively the model this is the model that I shared in the entries and management channel on Discord, and this is exactly what I traded. So it's just really keeping it simple and using the confirmations, using higher time frame points of interest to take lower time frame confirmations and actually take trades, and really just looking at that from a structural perspective. Structure was what gave me the clues to take the trade long, and I was pretty aggressive with the management of this. Of course, if I kept my management under the 15-minute and this clear 5-minute swing low, I would still be in the trade, but again, I was not looking to hold this trade over the weekend. Another thing that made me trail this trade a little bit higher as well is if we just look to the left, we also have an order block right here, this order block. You can see that we have equal lows right here that we spoke about. Price came, we broke structure here, and this was the extreme point. And we can see we even have a slight little order block here. We broke this structural point imbalance. So a series of mitigations for price to come lower anyway. So once we tapped into it, we can see that we just tapped into it, and that's what caused the violent sell-off. So we can still see that the bears are still in the markets. We have equal highs here. We have some equal highs here. So we could see price tap back up into this area, look for sells. We might get another buy in this area, but that's, for me, showing a further reason for entry for prices to trade lower. So looking for a sell within that to trade more down here would be the ideal route at this point, and something that I'm going to be waiting for, but we still have, 130, 140 pips to get to that point. But once price comes down, and if it comes down to this point of interest, this is exactly what I'm going to be looking for. Whether I take the risk entry or the confirmation entry will be dependent on price action and what the market provides. But I hope the breakdown of this pound US dollar trade was insightful and gave a couple valuable lessons on the entry models, and really just showcasing how I have been breaking down charts from a top-down analysis and, effectively looking at the intraday higher time frame, framing up those points of interest, and then executing on the lower time frame using the entry models that I've provided.
So really continuing the theme with what Brad's been saying in the early parts of this commentary, covering, of course, the previous week in terms of some of the exceptional trades we've taken from Wednesday up until close. And of course, looking at the markets for the week ahead, we do have some genuinely fantastic opportunities available. Now, something that Brad and I try to focus on within the commentaries, both the midweek and the weekly, is the core content behind the methodology, not necessarily the in-depth, advanced, granular pieces of information, because they're the pieces that we do genuinely feel that need to be focused on and harnessed throughout the new content that's continuously being released throughout the week from each and every one of the team members, including Brad and myself, and also within the individual coaching sessions. And the reason that is because it does require that personal touch, and it also requires you to continuously go over them. If we were to put them within the commentaries throughout the week, yes, over a period of time you'd be able to grasp them. However, the newer individuals, unfortunately, it may confuse them and throw them off track and potentially hinder their progression. So please bear in mind that the commentaries are solely focused on typical market structure, higher time frame, top-down analysis to ensure that we select from the G10 currencies and other asset classes we focus on the best, or at least the higher probable setups from decent 4-hour, 1-hour, daily POIs, and focusing on areas of liquidity that are giving us that potential opportunity to, of course, execute in that trade, or at least where liquidity is being dropped, rather than, again, going into the nitty-gritty of each element. And the reason that is to not confuse people. So if you do feel that you'd like to review advanced pieces of information, feel free to dive into the content over and over and over again. Then, of course, feel free to reach out via the questions channel or directly to myself or one of the team in our DMs, and we will go over it as much as we possibly can. If not, feel free to hit us up for an individual coaching session. Of course, sessions can be booked on our website via the Join Today page that you see, and we are shortly looking to release the coaching biography page. Now, I am just waiting for a few more team members to drop their bios in, because I wanted to do a specific graphic for that. However, the longer it goes on, the more I'm thinking to create individual biographies and stick them on one by one so that you have the ability to pretty much move forward with your individual coaching session without waiting for the majority or the minority to finally kind of get that in. And that is not a dig by any way, shape or form, just a notification so that all of the individuals that have requested one or are thinking of asking why don't we have one or can we make one, please note it's in the works and it's nearly done. We're just waiting for the final few, and then we'll get it created into a graphic, transformed, wax into the community so that we can all benefit from it. I just want to say before I start as well, a huge warm welcome, like Brad will have already done, to all of the new community members. And I'd also like to say an extremely oversized well done to all of the individuals that passed their FTMO verifications and challenges this week. I believe we had several individuals with new FTMO funds, anywhere between 500,000 and $1 million in funding for this week alone for Phantoms. So that's an incredible moment, I do genuinely believe, for the community and for those individuals that are embarking on their trading career and trading journey, because they're now funded traders or they've increased their funding in terms of the money under management. But without further ado, let's dive in. So as we begin, I do want to quickly say that I have moved from the dark side in terms of the charts and I've gone back to white charts. Now the reason I've done that is not necessarily for my own preference or because I didn't like darker charts. It's actually to keep in sync and provide continuity through the community. I noticed that many individuals within the team had started to either shift or revert or kind of alternate their colours and go back to the lighter theme, which it makes sense for me, not necessarily to hold firm and go with the dark elements and dark kind of focus and theme, but to be, in my opinion, alongside them, aligned to ensure that all of the community get that continuity and that in sync feeling so that we're all aligned. Now, I appreciate that some would have thought that, okay, you should have stayed on the dark theme because you're Phantom, blah, blah, blah. But again, I want to make sure that we're all completely aligned, and I wanted to give everyone that continuity feeling as well. So yeah, you know, I'm not a huge lover of white charts, don't get me wrong. They look wicked, they do the job. ABC does what it says on the tin. But for those of you that have wondered why I've switched back from the black theme to the white theme, it's purely to keep everyone else aligned and for continuity. I want everyone to be able to pick up on the scent and learn in a thoroughbred environment so that we can all gain and benefit from all of the knowledge simultaneously. So without further ado, let's quickly dive into sterling yen and let's focus on the potential opportunities that lie ahead for the forthcoming trading week. So if we take a look at the weekly time frame for GBP JPY, we can see that we're still trading inside this range that was highlighted to us throughout the midweek commentary. The market has successfully and continuously made a succession of higher highs and higher lows following this attempt to break the downside. Unfortunately, it failed to do so, and we do, of course, have the ability now to tap into this higher time frame POI and area of interest of 144. So big round number, 144 handle, bearing in mind we're on the weekly time frame, and it does get cleaner and clearer as we move into the lower time frames. So now let's kind of look at why we've picked this block. If we look to the left, we've got this kind of curved arced top that's not really mitigated anything. It's fairly efficient. We haven't broken structure to the downside on the weekly time frame. We have formed some equal lows that have then been smashed. The liquidity has not only been kind of swept, it's been grabbed, and the market's continued to move to the downside. Now that primarily is because we are in a bearish trend. We're making lower highs and subsequent lower lows, and we did attempt to break this range low from earlier in 2020, which of course failed, so it wasn't the most convincing of breaks. So it does potentially lead me to suggest that we could actually break through this area of interest, sweep and basically grab all of this liquidity that's sitting up here and above here and continue to move to the upside. Thus, the potential opportunity for further longs, further strength in GBP, and a reversal in the trend conditions in terms of a change of character to continue moving to the upside. Now that being said, if we actually focus and take a look at this particular section right here, the momentum is very thin, it's nigh non-existent, it's very corrective in nature. Now if we actually take a step back and look at what previous kind of candles have done in terms of their momentum, we have some fairly big momentum candles to the downside. This bearish candle here, this bearish candle here, this subsequent 2 bearish candles here, yes, we do have this small one, the blue kind of bullish momentum candle there as well. But you'll notice that there are far more bearish momentum candles at present than there are bullish momentum candles. So that does lead me to believe that this corrective movement up here, whilst it's still going to require a confirmation entry and of course refinement onto the 4-hour and 1-hour time frames, it does lead me to suggest that there is a possible for further weakening and further downside potential price action. So for the week ahead, just on this kind of time frame, I'm going to be looking for us to sweep the liquidity above these equal highs printed here, kind of fill all of this imbalance, which we've pretty much done, but actually tap into this area of interest. Realistically, 143.85 is obviously the EQ of the block, but bear in mind 144, big round number, sentiment, psychological, people are going to want to be attracting to that number, and of course maybe even see us actually tap above this. Now, bearing in mind, if it does tap above this area of interest, it doesn't necessarily mean that we're looking for longs. We have to wait for the market to show its hand, develop that story. And for those of you that do struggle with patience and unfortunately are looking for, in essence, get rich quick, several trades, activity, taking a lot more trades in the trading week, of course through the lower time frames, I would thoroughly recommend checking out the Christmas special by Sketchy and Alb, because they cover the element and ideology of really taking your time to build out that picture and build out that story. But thus, moving on to this part of the commentary, if we actually look at what we've got here, we've got this really nice AOI. It's been untapped. Liquidity has been dropped pretty much all the way down and all the way up. And we've got relative equal highs on this close. Now, if we look at the weekly candle itself doesn't show much. Does give us an insight that this kind of doji candle, this shooting star, this area here wasn't the most convicting. It didn't hold as much conviction. Apologies. But we do have to wait to see what the market does do and continues to develop. So let's move into the daily time frame, just to see kind of what's going on here, just to get a better idea. So as we move into the daily time frame, we all are fully aware that several of us took longs in GBP, JPY. Many of you banking well over 30%, up to 80% are on this particular trade alone, just from these swings. Thus, realistically, we're looking to make a higher high based on expectational order flow. If we were to look here, really textbook move, and this is something that Brad and I and Brian and several others within the team are really starting now to hopefully provide greater insight into the models of execution. And Brad put a fantastic one out there the other day, which was pretty much this kind of model, and then realistically it does potentially suggest that there is going to be another pullback, and then there. So this would be realistically where we're looking to get long based on expectational order flow and the model that Brad kind of highlighted to you within the putting it all together part 2 video. There is also a graphic inside there. So if I just draw this model out in kind of a better format, we're looking for this kind of move. Now this would be deemed as a risk entry. It's still a confirmation entry subjectively, depending on what you're doing and how you're getting into it. But on the model, this is considered the risk entry. And if we were to actually take this POI here, following this break of structure, then this for us would be the confirmation entry. And of course, you could either take it at the distal of the block, or you could look to take it at the EQ. Now, for those of you that are new to the community, the distal of the block is pretty much the 100% entry, so the very beginning as the price taps in. Alternatively, you could look to take the EQ of the block, which is quite simply the 50% range between the high and the low. Now, there are several ways to work that out. You could, of course, use a fib. You could use the EQ box, which would highlight this blue line here being the EQ. Or quite simply, you could obviously just hover your cursor over the block, and you realize that you've got these elements here that you can, of course, increase and decrease the size of the box. And the two mid sections of this block would of course equal the EQ. Now, it depends how precise you want to be. Remember, some of us do try to front run our positions, factoring in spread, factoring in latency and all of the likes, and of course factoring in the ability that if the order block is extremely sensitive due to liquidity, it could run before actually tapping us in, which we did see in cable earlier this week. Now, I'll leave this model up just while I'm of course going over the rest of it, and it may become a nuisance as we move down into the lower time frames, but I highly doubt it. For those of you that are looking to draw this model, please feel free to run into the graphic of the one that Brad created the other day. And of course, we are going to be releasing more models, more advanced models, that help you to understand when to take executions around mitigations of liquidity, mitigations of equal highs, equal lows, so that you can understand why and when to take trades where equal lows or equal highs have been printed and an order block potentially sits before you actually taking into the EQs. So kind of continuing with the daily, what are we printing? Higher highs and higher lows. So at the moment, character is to the upside, so we are going to be continuing to look for bullish movement at the moment until realistically on the daily we start to see a change of character for the higher time frame moves. Then we are looking for longs. Now, because the markets are fractal, we are of course going to be seeing those reversals, those change of characters build up from the bottoms up, basically on the 1 minute time frame all the way through to the 1 hour, 4 hour, and so on and so forth. So for me at the moment, I am still looking overall for longs. However, there are opportunities for us to take the counter trend shorts, the hedges into the mid of the expectation order flow. Now, for those of you that are wondering what the EOF is, which is the expectation order flow. Now, bearing in mind, this is printed right here, a higher low. Now, this was here the previous high. Based on expectation order flow, we are moving in a bullish trend, so we are making higher highs and higher lows, higher high, higher low. Now, based on expectation order flow, what are we now expecting? For the market to create a higher high, pull back to around the EQ of that, and then go on to make a higher high. Now, how do we work out the EQ? So if we were to take this full leg here from low to higher, then realistically we want to be buying, going long in the in the discount of this range underneath the EQ. So again, the EQ is the 50% of that full retracement. Ideally, we want to kind of see a pullback underneath that 78.6 fib, primarily because retail have their stops under there, under the 61.8 if they're a bit more aggressive. But you know, that's retail, so realistically we want to smash them out and then move up to the upside, and that's the way we create liquidity. So that's expectational order flow, and taking into consideration what we're seeing in the daily time frame, for me, I want to see us kind of push up, tap into this 144 block, and then I would realistically like to start seeing some shorts. But at the moment, I am definitely looking on the lower time frames for longs hedging into that short. So if we move down into the 4 hour time frame, see what we've got. So this is something I was looking at the latter end of the week. So kind of Thursday, I was talking with one of the team members about taking shorts from this area here, this order block here. Primary reasons. Following this long, we had swept these equal highs to the left, and we pretty much rejected that, kind of took all of that liquidity from the upside and started to move to the low. Now, just focusing again, expectational order flow, what did we do? Take this leg, move to the upside, pull back, breach that 50% EQ, and then of course we started to get rejections and move back to the upside. Now, the momentum is still very much equal. Really decent bullish momentum candles, and of course we're starting to creep in and see a lot more bearish momentum kicking into the market, which does suggest that we're starting to see distribution. Now, if we factor in what the distribution is, and if we were to even take into consideration the Wyckoff schematic, now we do have several phases to actually take into consideration. Phase A, Phase B, Phase C. Oh, sorry about that. Phase C and Phase D. Now, these aren't correct. This isn't precise, but realistically, we're going to start seeing those fluctuations throughout that. Now, depending on what we're looking for, ideally, we're going to be looking for, as we move into this zone, the up thrust after distribution, and then we're going to be looking for that nice move to the downside. Okay, so that is utopian. If we were to get that, that's incredible. But for now, we're still looking for those kind of hedges, the longs into the shorts. So if I was just to quickly remove all of these. So for me, if we were to look down here, nothing really stands out too much. Of course, we've got some inefficiency left here, which you could see that the market tapped into, swept into the EQ of the block. This is just from a swing standpoint. If you're a higher time frame trader with a full-time job, then realistically you're going to be trading the 1 hour, 4 hour, daily and weekly trends, unless you do have the ability to execute with precision on the lower time frames by utilizing the alerts within TradingView. But of course you will potentially be hit with the maximum exposure on alerts. Now again, risk reward won't be as good as you can get it, but remember, let's not be greedy. We're ignorant to how amazing the RR is on this strategy, and if we were just to play off the 4 hour, the expectancy of this trade is 1 to 4, 1 to 3.92. Full risk, 3.92% are made on this trade, which for a part-time, fully focused hobby trader that devotes his separate spare time to the business of creating an additional income through the financial markets is incredible. That's 39.2% uncompounded annualized without even taking into consideration additional 2 months of the year where we like to factor in maybe slower months or breaks, holiday periods, Christmas periods, festive seasons, just general time off for wear and tear, illnesses, etc. Uncompounded, it's 39.2%. So, those of you that do look to compound, then realistically you need to be adding an annual AER of 1.13% on top of that. But, I go on a ramble, sorry. But yeah, really, really nice risk to reward on the 4 hour. But we can get better. But let's not rush it. Let's not kind of get over egotistical and focus on what others are doing. Focus on what you need. Focus on what you want. And I assure you, not Phantom being me, but Phantom, the whole community and all of the team members, eradication of the noise will get you there. Now, just make sure you don't get caught up. And I can't really hit that message home too much. So let's move into the 1 hour time frame now, because we understand market structure, we understand expectational order flow and areas of liquidity. You can see we've got those areas of liquidity to the left that have been smashed. All of that liquidity has been swept. Thus, there is the ability for us to now move to the downside quite firmly and safely. Otherwise, we're looking to, of course, create that now redistribution or that distribution structure to actually get into the shorts from that 143, 144 handle. So as we move into the hourly time frame, what can we start to see? So after we swept the highs, we pushed down, created some substructure areas around here. Not the cleanest, but it is traffic. It does give us signs that there is liquidity sitting in there that's been built, that's been dropped. What have we then done? So once we broke, we've kind of looked to retest those highs. Unfortunately, we failed to break the high on that swing, move back down, no real structure breaks. We've dropped liquidity. Equal highs have been put out here on the 1 hour time frame, and then we've moved and broken to the downside, which in a fractal nature does start to signify that we are starting to move to the downside. We've pushed back in. This order block is now completely filled. Liquidity wise, we've hit the EQ 1, 2, 3 times. We've tapped back in it as a retest. Weak hands, weak shorts will have been stopped out through their break evens on the retest, and now we've started to move away. Now, it doesn't necessarily mean on Sunday open we're going to gap down. As we know, when we get gapped, we kind of fill that gap. We create and tap into the order block that's been put there, and then we continue moving to the downside, breaking several areas of structure to the downside. And of course, carving out the opportunity to get long from this 140 handle. Now remember, we're inside that massive range. So until we really put any definitive highs or definitive lows in the market, we need to kind of be able to evolve, adapt, and exploit the opportunities within that range, because there's several hundreds of thousands of percentage and are available, let alone pips, which we rarely focus on, because pips don't make profits, percentages make prizes, okay? So what else have we got? We've got these relative equal lows here. We've got a nice swing point here. So for me, going into next week, if I just kind of remove some of this noise off of the chart and actually kind of see what we've got. Fairly efficient, pretty much all mitigated to the downside. This is pretty efficient as well. So I'd like to see how this pans out opening up into the week. You know, we could pull back to this area of interest here, which is, you know, sitting here nice. Is it a true swing point? I'll check on the HA at one point over the weekend, but I recommend you do so as well. But around that kind of 140 spot 80, 141 handle, there is potentially going to be opportunities to get long from there. Again, 141, big round number, sentiment, psychological. There are going to be a lot of bids and a lot of offers there, to be fair. You know, you're going to see some shorts kind of ranging from these lows. So let's see how this market continues to develop out. Like I said, we dropped these equal highs here. On the swing, may I add, so that you all appreciate that. Relative equal lows here, but ultimately this is the 1 hour swing low, and you've got the 1 hour swing high here. So once this 1 hour swing low breaks, realistically, that's going to really give us that intent to the downside, that commitment that we are looking to change character. If we do ultimately break this swing low with real momentum and real conviction, full-bodied candle that shows that liquidity could continue to the downside, that's when we want to kind of get that confirmation from this kind of move. That's where we'd be looking to take the short from, ideally. You know, that if that's the area of interest, that order block that have actually created that momentum to break the structure to the downside. Simple move. You could either get in here with a confirmation entry on the lower time frame because it's fractal. Alternatively, you could wait for the market to tap in again and then take this one here, which is your double confirmation entry from the double break of structure with bearish intent, commitment, with a successful retrace back into the area before moving to the downside. And that is probably your safest option. However, when we kind of review and refine everything we do into the lower time frames, it does give us the ability to get in with more precision and of course execute with tighter stops and of course get in a little bit earlier. But remember, as I said, you don't need to be the first into the trade. You just need to make sure the trade fits your narrative, fits within your trading plan, and when it comes into the range and into the zone, smash the bids or lift the offers as much as you possibly can, with of course the specified risk parameters in place. Let's move into the 15-minute quickly just to see. You know, again, dropping liquidity to the left here, dropping liquidity, relative equal lows here, kind of mitigated the EQ of this block and pushed to the upside. And we have seen some breaks, you know, not necessarily anything that shows me that we're going to continue pushing to the upside, but we've broke this level of structure, and that came from this area here, which we started to tap into the close. So, you know, on the open, let's see if we can get an entry from the reaction of this area of interest. Alternatively, you know, maybe actually coming down to sweep this liquidity that's been left here on that trend line. But ultimately, you know, for me, looking at the kind of overall market theme, I'm going to be looking for hedges long into the shorts from this kind of 143 level, and then I'll be looking to get short from around here. If the market does decide that we're going to be looking to push down first, then I will be looking to get a confirmation entry. Moving on to Euro Yen, another incredible mover, an incredible pair for the community over the last week. Heading into next week, there is still some unfinished business, and it is nice to see that we're actually tapping into a higher time frame order block on the close of the trading sessions and week last week. That being said, it does mean we need to be prepared at the open for liquidity and markets to develop, with us being able to execute and exploit any potential opportunity that sets up. Now again, don't rush. You don't need to be the first into the trade. You just need to allow the market to develop show its hand and build a true story for us to get short. And don't rush. Don't forget the models we're using. So if we kind of start on the daily time frame, just because it's giving us the highs and the lows from the weekly that I've already mapped out. We've got the weekly high and the weekly low. Of course, we've got these swings inside as well to factor in, which are key areas of structure. You know, we can see some nice areas of interest and liquidity that have been formed and dropped all the way up. You know, we've got some small imbalance on the weekly time frame left from this area of interest here, which in turn broke these kind of relative equal highs here, and then it kind of moved on to break up the upside structure here, but very correctively. Rightly so, this is another order block that we did have our eyes on from the beginning or back end of last week. But for me, you know, if we're going to pull back, then this kind of momentum here, there was nothing here from this kind of last sell, and the wick is just too large for me to even consider it. But don't get me wrong, if you had kind of taken the kind of tap into the daily order block and moved to the upside, then yeah, that's great. Based on expectational order flow, what are we looking at? You know, we've got the higher lows and higher highs being put in. So realistically, we're looking for a higher high to be printed in the market. Now, don't get me wrong, and don't forget that we will and can see markets based on the expectational order flow. They're not always completely clean. You know, we could get this distribution looking schematic based on Wyckoff that actually isn't a distribution or an accumulation. You know, we do get areas and sideways ranges, areas of accumulation and distribution and phases that have got no supply and demand. They've got no real areas of interest. They've got no intent, and that's okay. Sometimes we'll get that within a Wyckoff, and it's not, you know, it's nothing we can do about it. Probabilistic, it happens throughout your career. So don't worry too much if you're protecting your capital looking for shorts, or if you're unsure of how to take a trade, just wait for the market to play out and become clear again. So again, expectational order flow, looking for a higher high to be printed in the market. If this was the true swing low based on expectational order flow, it doesn't necessarily mean that if it did kind of not tap into the EQ of the block, depending on where you've drawn your leg from. You know, realistically, if we drew it from this swing, then we tapped into the EQ, then started to move to the upside without real, you know, without too much convincing and conviction. But the candles themselves, the bullish momentum is pretty much there, especially if we look at the kind of corrective momentum coming to the downside. If I just zoom in, you can see there, which we'll see on the 4 hour and the 1 hour a lot clearer, we started to tap in and reject that 4 hour order block, which if we look, made a higher high, started to create and break this structure here, swept all of that liquidity from those equal lows there, and of course all these equal lows to the downside and to the left. And we still have some imbalance left down here. All of this imbalance has been filled, you know, from wick to wick. We've got here to here, you know, all of this imbalance has now been completely filled. So it does give us the potential that we could have actually taken the EQ of, the EQ of the imbalance, which aligns perfectly with the swing low and where we've actually seen that rejection of that wick. However, of course, you know, realistically looking for a confirmation entry as we move into the lower time frames, you will begin to see. So if I move into the 240, we'll see a lot clearer that upper AOI that we've started to tap into and reject so beautifully. Realistically, you know, this was the tap. Again, no real structure broken to the upside. This, you know, this to me wasn't the most convincing. Had we have got one kind of more candle, let me just put it here. Had we have got a full body closure like we had here, then moved back in, then I would have been looking ideally for a long, or at least a confirmation entry to kind of move in. But factoring all of that in, moving into the lower time frames, realistically what we would have done, drawn out this area of interest, seen that break, push that, then on the lower time frame look for the simple entry model that we discuss, look for that, and then look to get in on the confirmation entry, like so. So on the lower time frame, which we can actually tap into in a minute just to see what we did get. But really, really nice push to the upside for those of you that did manage to get into Euro Yen on the 20th of the month. I know that you'll see that was Wednesday, so really, really nice trade. Beautiful push to the upside, broke this structure here. And if we were to look, from a momentum standpoint, what have we got? And we've got this nice area of interest here that could be deemed. We've got some good momentum coming off of it. We've got a bit of imbalance that's been left and a real nice push to the upside. So now what am I looking for? A short from this area of interest here that we've just tapped into, push back in to fill that imbalance. Ideally, I'd like it to move into the EQ of the block or deeper on the block. Then I'll be moving into the lower time frame, 15 minute, 5 minute, and then I'll be looking for this model to get long. And again, I'll be looking for longs from around this region here. Nice confirmation entry, EQ of the block, like so. And again, on the lower time frame, this will be a lot tighter. Nice 5 pip stop. Back up at least to the swing high, if this is the swing high, for a nice 16.96% or 16R, 17R, depending on how you do that. Don't forget, as we start to break this structure here, you may want to look to move your stop to break even and take some partials on the trade, running at just over 5.5R. But move your stop to break even, or alternatively, just take 1% off the table and cover your risk and your downside. So thus you get 5 more pips room of breathement, just in case the market were to break the structure, come back to test one more time, then go. And that happens far too often. When we feel like we're safe, we move our stops to break even, and then unfortunately we do actually get taken out of the market. But that's realistically the model that I'm going to be looking for heading into next week on the longs. Yes, we do have these equal lows below us, but we've mitigated a fair amount of stuff to the upside. But I will be quite conscious and cautious depending on how we move in and how we react to this area of interest. If we're looking at the upside where we are at present, of course, we've tapped into the order block. I'd like to see it move into this 1 hour, come back down, break structure, move back in, and then I'll be looking for a short to the downside to get into this area of interest for the long, okay? So let's move into the lower time frame. Let me just quickly clear all of this. So the 1 hour, really, really nice push to the downside. Now, we haven't broke any structure yet, so you can't class this as an order block or an area of interest, but immediately we can see that unless this next candle that's actually printed comes in to actually fill with a wick or whatever you want to look for, or if a full body maybe, actually comes back in to fill this area of inefficiency and imbalance, it would leave us with the opportunity to consider that as an order block if we do break structure. Now, subjectively, you could class this as one swing point. This is the best swing point or the better one. So if we got a nice move to the downside, tap back in, and then of course look for the entry on that, that would be splendid. But we'll see how the market kind of develops itself over this open on Sunday. Heading into Monday, we might get some really good opportunities. I haven't actually looked at the macros for next week just yet, so I'll do that over the weekend, and feel free to obviously do them yourselves. Hit me up if you see anything interesting that could be high macro, be it medium or high impact. And just be careful with your exposure in the euro or the yen over the Asian session because of liquidity and of course because of volume as well. But that's pretty much about it for euro yen. Really, really nice potential trades. Of course, looking for the shorts and for the longs whilst we trade inside this overall range. Both of them have got pretty good and simple models. There are some advanced models that we could look at, but realistically, I do genuinely think we might actually move to the upside, take out the liquidity and sweep these highs, equal highs here, move into that 1 hour order block, create 15-minute breaks of structure, move back in, and then we'll be looking for the shorts on the 15-minute and 5-minute time frames. If we can get the execution on the 1 minute, 2 minute or 3 minute, maybe even the 30 seconds, we will. But for those of you that are new to the community, don't rush to get down below 5 minutes. Once price taps into the 4 hour and 1 hour order block, let that story build and then move down and refine it into the 15 minute and 5 minute and wait for the confirmation entries. I assure you, it's the best possible mode and method to get involved within these trades. Still gives you a tight stop, excellent risk to reward ratio, and you'll be thanking me at the end of the day. So thank you very much. Let's move on to the next pair. Moving into the final pair for the commentary this week from myself is Kiwi Dollar. Now, starting on the daily time frame, we can see that we are still in a bullish uptrend, making higher highs and higher lows. Now, we have started to show a potential change of character as we have started to break these lows here with some real nice bearish momentum. However, of course, we've moved back inside and we're starting to create a lot of liquidity to the left here. And we did put a really nice daily close in. Of course, decent bearish momentum candle. Wasn't quite engulfing as it didn't engulf this previous candle here. But it did tap into this area of interest that was moved inside this wick. So there's a really nice kind of move to the downside. It was a play on the cards from earlier in the week where we did look to get long. And this was our initial target, which for some of us, unfortunately not myself because I did get stopped out, was about 35 for R. I know that for some of them, you actually had a tighter stop as well underneath 3 pips. About 2 pips, and it increased it by about kind of 15%. So really nice setups there. I know some of you that did catch it, and it's humbling to know because it means that our community and our commentary must be spot on, you know, without blowing smoke up our backsides. If a lot of you can exploit it, or alternatively, it means that the commentary, the content, and the education that we're putting out there is transferable in your own skill set, and you're taking all of it, putting a lot of work in, and in turn, you're smashing it, which, you know, as per my intro, we've seen some incredible traders smash the verification and challenge phases this week and obtain funding from FTMO being the main one. But if we look at the daily time frame, like I said, this change of character here does potentially mean that we are seeing a slowdown. But until we really see some keen signs of breakdown, for me, I am still looking for a higher low and a higher high to be printed as kind of put into the chart here. But ultimately, there might be a pullback to create liquidity here, drop liquidity, and then we look to move to the upside. So daily, not much really to focus on. Of course, we've had all of this area of interest now smashed into. We do, of course, have this order block that could have been tapped into. There is still some liquidity in there. But overall, fairly efficient. If we were to, of course, break this structure, you know, efficient price action pretty much all the way up. We do have this candle here that we could potentially consider, you know, a decent amount of inefficiency on the daily time frame. That is something that we may want to factor in if we look at the overall leg of the complete structure. You know, that would be comfortably inside the distal, comfortably inside the discount of the EQ leg. And I know Blackwatch will be watching that if he had Kiwi Dollar on his watch list. So moving into the 4 hour time frame, really nice kind of pair. On the lower time frame, and of course in the short term, you've got lower highs and lower lows being carved into the market. We had this area of interest that was on the lower time frame, absolutely exceptional. The one thing that put me off of it was the liquidity to the left. We had dropped these equal highs here, and it remains underneath this 4 hour liquidity. The one point I do wish to make is there are 2 4 hour order blocks that are still yet to be tapped into. This one does suggest that this one has been mitigated, but it's yet to be kind of confirmed, because the reason we suggest that, come down, dropped an order block here, real nice bit of liquidity, moved back in, swept it, took all of the liquidity from the EQ, moved down, and has continued down pretty much ever since, which again, I know several of the community and team did get in this trade, and just on the 4 hour alone, you know, for the higher time frame traders, you would have banked an impressive 21R. So some of you, don't give up your day jobs, focus on these and smash out 3 to 20% a month. But in all seriousness, you know, we dropped this liquidity here, and of course we've mitigated all of this liquidity to the upside. So this 4 hour order block is still very valid to me. So I would like to see us pretty much move back into this area of interest here create a higher low, then move into that 4-hour order block, and then start to see us actually breaking structure and move to the downside, which would be, of course, a really nice trade. So heading into the week, what am I looking for? I'm going to be looking for the market to move back into this area here. I'll be looking for a confirmation entry. Again, just base it on the same basic pattern that we're talking about. And then I'll be looking for us to get long. Ideally, if we could print some like double tops at equal highs here. Ideally, we don't want to be dropping equal lows, so I'm going to move this up a little bit. So ideally we want to be creating higher highs on that swing. We don't really want to be dropping equal lows, otherwise there is a chance that market could come back to sweep them. But ultimately, if we look at this entry model here, look for a move in, then on the lower time frames we'll look for a lower time frame model 1. Nice structure, break of the structure, pull back in, risk entry, break a structure, pull back in, confirmation entry, and we'll look to enter on the distal or the EQ of the block, subjective to how it breaks that structure. Again, remember, if it breaks it correctively, that's a type 3 mapping, and it's something where we deem it to come back to a decisional order block and usually hit the distal of the OB. Yes, more times than not. Obviously, one thing to factor in, it can hit the EQ of the block, so just bear that in mind. But if we were to actually move into the 1 hour time frame, just really kind of seeing what is presenting itself. You know, we made and tapped into this order block here, which you can see. Very similar to the short Aussie dollar trade that George took and several other community members took from this kind of wick here inside that larger 4-hour OB. To me, it was something that at the time I didn't think was textbook, but in hindsight, going back to it, and kind of discussing it with the team members, and actually looking at all of the mitigations, all of the liquidity that it dropped and created and swept on its way down, it was definitely an exceptional setup, which probably would have ended up running you, between 15 and 25 R just in that short alone. So just kind of seeing what we've done recently, we've dropped these equal highs here. We also have a really nice 1 hour order block that's sitting there, which does suggest that we could look to move back up, tap into that order block, and then look for that short to the downside, moving us into this zone here. Of course, ideally, that's where we want to be looking for that kind of long confirmation entry to get into this 4-hour order block. So just to summarize, we have 2 probable trade ideas going in for Kiwi dollar alone, looking for longs from the 71.50 region. Again, mid-round number, psychological number, and of course based on sentiment, that is still a decent number to get long or short from, 71.50. And we also have this area of interest up here sitting around that 72 big round number handle to get short. But ideally I'd like to see us sweep the liquidity here, drop an OB, break a structure, tap back in, confirmation entry, move to the downside. So yeah, Kiwi dollar at the week, looking at the week ahead, of course, 2 really nice setups there. Maybe short from here, long from here, and then ultimately we're looking for that big short from up here where we start to see risk off of the table, and of course the key and any risk pairs, NZD, GBP, Euro, AUD, CAD, NZD, and every pair coming off, Japanese yen, US dollar strengthening. So just remember that dollar and the yen are 2 safe havens. So that can be quite a messy pair. So just be careful. But for Kiwi dollar, let's see how the market opens up on the open on Sunday, and then let's see how we kind of deliver and factoring in the short and the long, and we'll look for the entries as they present themselves. So going into next week, we've got some exceptional trade ideas in cable, fiber, Aussie dollar, Kiwi dollar, GBP JPY, and Euro JPY, both shorts and longs. Just remember to be patient, take your time and focus, and don't dive too quickly into the lower time frames until price has really established itself inside that 4-hour and 1-hour order block. And just wait for your confirmation entries, and then once price gets into it, execute without hesitation. But for now, I love you and leave you all within the community. Again, a huge warm welcome to every single brand new Phantom that's joined the community in the last week. And I look forward to sitting alongside and trading with all of you in the coming trading week. If you feel that you need me, drop me a DM, or any one of the team members, reach out for a question. and if I don't answer you, feel free to give me a nudge. But have an incredible trading week, and I look forward to seeing you on the other side.